Okay, good afternoon, traders, because it is afternoon. It is Wednesday afternoon, and it's right after the Fed meeting. Welcome to Short-Term Trading Live with Oscar Carboni. Thank you for coming on down. This video is video 1,130 videos. Sometimes they work. Most times they work. Sometimes they don't. Let me show you something really interesting here. A really nice chart with a bad turn of events. We know that futures trading can be extremely risky and can cause substantial financial loss. Futures trading is not suitable for all trading accounts. And I've just been informed by my right hand over here that it's video 1,131. Rock and roll on 1,131. All right, so finally we have direction, traders. As you know, these last few days since we made the highs 5 days ago has been very, very difficult on us. And here is what happened. I showed you this chart last night. This video is good for going out through the rest of this afternoon, Wednesday through Thursday. I showed you this chart last night, and I said, look, we've got this tremendous support line here. It was resistance, resistance, resistance. Resistance became support right there. Went right, it got through, became support. Massive rally brings us to new highs. We come back down, we test it for 2 days. Today we smash through it. That is a bad turn of events. That should not have happened. News came out today. When you are in a bullish market, generally what you will find is that news, big news events like a Fed day, sends the market back up into its natural trend, which has been bullish. Today, big news came out and it broke us down through some major levels. That's not good. That's not acting like a bull market any longer. And if you've been following OMNI since 2007, it knows how to trade bull, it knows how to trade bear, it'll trade whatever the market gives us. We are absolutely flipping sides, at least for tonight. We'll see where it goes. But we are starting to change hats now from the bull camp to the bear camp. And let's look at a few different scenarios here. Here's your Dow Jones Industrial Average. Let's go for the transportation average. When you look at this chart, the transportation average, you'll see that we have a bear flag. It has just developed. Before today, you did not have that. Let me show you how this works. If you take this bear flag away, right, we're going to pull this thing away. And we're going to show you how it was. This is actually a turnaround day, right? Boom, you had the down day. Next day you had an up day. It settled by the highs. It didn't get past the previous lows down here. Looks like a turnaround day. But things change very quickly. Markets move very quickly in the futures industry. Add today in and the landscape changes dramatically. Watch. We add today in and that, my friends, is a flag now. Forget about what it was. It is a flag and a bear flag. So now a bear flag has developed. That is absolutely a bad turn of events. Traders, come on down to livewithoscar.com. Join us in the free chat room where you can participate in this live class. All right, so transportation average and industrial average not looking good right now. Let's move along. E-mini S&P. Look at this chart. My goodness, a bear flag develops out of nowhere. And as we know, futures trading is extremely risky, can cause substantial financial loss, like if you did not have a stop in today and just let this thing go. So here's your bear flag. It just developed. Remember, let me move this. No bear flag as of yesterday. You cannot say, oh, why didn't we see the bear flag? Because it didn't exist. This is a turnaround look. But, and let me show you a little more. It's a turnaround look. Look at the support right here. As of yesterday, you've got support from this spot right here. It hits again here. It just about hits here and starts to turn, right? We get a turnaround day. So that's a turnaround look. And then today happens. Ba-boom. Wednesday happens after the Fed meeting, and no longer do you have a turnaround look, but now you have a bear flag look with a breakdown. Testing this support line right now. The breakdown, you see it through the bear flag, testing the support line. There's no shot I'm going bullish anymore. Not with this going on. So we've got some stuff going on. Let's look at another chart. NASDAQ, one one of Oscar's infamous F flags out of nowhere just shows up. And what's really ugly is we didn't get back above this was support, now turned into resistance. Let me show you what I mean. We hit this. Today doesn't exist, right? We're doing yesterday's analysis. We came down through here, but then we turned around and clearly settled back towards the highs. Now, when you look at it, you say, all right, we didn't take out the previous low. Right? The previous low is here. We never took that out. We should be okay. So you got to look for a turnaround here, especially the OMNI was turning around, and the DAX chart we'll look at later give us absolute reason why we should be looking for the buy side this morning. So this happens, which is Wednesday. The big bar, an outside reversal bar. This is what makes it key. All of these bars I'm showing you are outside reversals. Why? They've gone higher than yesterday's high. They've gone lower than yesterday's low. And if they settle below there, you have outside reversal key bars to the downside. This is getting interesting very quickly, right? Turn of events from yesterday to today. So let's put our flag back. This is what we're in now. We are in an F flag, and we will respect it. This market's going down. Let's go take a look at something else. Russell. Look what develops here, a pennant out of nowhere. It develops and then gets violated upside and downside. Again, let me show you this. If you recall, what's a reversal day? A reversal day is a day that goes higher than the day before's high, and then somehow turns around and goes lower than the day before's low, as it has in both cases, and then settles below it. Key reversal to the downside. Ugly bar. Match that up with what looks like to be a quick pennant that formed and then got blown through today. And this bodes well with the rest of the case for now bearishness. Then we've got this trend line right here. Was support in many spots. Was support again right here. Extended out, was support right here on this bar. I don't know if you can see it, but it was support right on that bar. All right, put the line back. So, looking good there. You get above it, but then in 3 days, we've got this pennant that forms. The pennant gets violated. The outside reversal bar gets put in. That is bearish. That's ugly. Now, the chart I told you that, or the market that I told you we have been following lately, the U.S. market has been following the DAX. That is unequivocal. That's the market that I expected to have the turnaround, to find its legs and turn around. So we use this to try to expect a buy. What happens, the market does open, it holds, rallies all the way up 200 and some odd points, stops cold, turns around, breaks the line, and dumps. Now we're under that support line. This was part of my thesis for why we were going to be long after the Fed meeting, right? We didn't do it, of course. We traded last night and made a winning trade in euro and a losing trade in S&P because we didn't take the quick profit and whatever. So head down, nose to the grindstone, on to the next trade. Now the trade looks bearish. As long as we settle down here, as long as we settle down here, in all the markets I just showed you, the case I just presented for you will absolutely work out if analysis has any merit to it at all, because these are very bearish signals. Now, go look at the weekly on the DAX. The weekly on the DAX, if you recall, this weekly bar did not have the bottom of it at this point. The weekly bar looked basically like this. It went down under, it went back up, and we were sitting up here as of yesterday, sitting up here. So this bottom green didn't exist, and it looked like we penetrated the weekly trend line a little and went back up. And last night we had that settlement here. So it looked decent. But today happens, and it makes the weekly bar grow. So when you add today in, look what happens here. Boom, the weekly bar grew, violated this completely, settles lower. Your new target for DAX is down here. 88, 16, maybe 87, 850, 8,700. I don't know, somewhere between 88 and 87 looks like the new target. That is ugly. I hope we don't get there. There are some plateaus first. You've got support right across this weekly area here. So you'd have to get down into that support at 90 and 90, 80 or 91, see if you break that. But the odds are good that this is going to start to spill off a little bit now, traders. If we're following the DAX, which absolutely we are, there is no question there. And the DAX looks like this on the weekly as of today, and looks like this on the daily. Well, we're following a market that's going down. So this is what I wanted to show you. Again, look at that weekly one last time. And remember that when we were above this line, we were looking good, but you violate a weekly trend line that's been working for all these weeks, you've got a problem. So now we are absolutely looking to sell the rallies at least for a few days. Traders, thank you so much for watching this class. Thank you for coming to these videos every day. I really hope this helps to keep you in tune with where the markets will be going for the next 2 days. Keep your stops in. Never, ever trade without stops. A stop is absolutely your best friend in this business. And with today's volatility, without a stop, you will be a statistic in this business. Traders, don't forget, always keep your emotions out of this bad boy. One of the best things I can do to help you with that, is, especially when you're looking in the mirror, is to say this to yourselves every morning, every afternoon, every evening, and you know what's coming next, don't you? Stops are in. Emotions are out. Traders, thank you so much, and please keep your stops in.